So for those expats who are self-employed and living overseas, how does that affect their taxes?
For the most part, it's the same. When you're self-employed and you don't have a business entity, or maybe you have an LLC or something like that, you file everything on Schedule C, profit and loss from a business, which is attached to your individual tax form, Form 1040. You would also prepare a Schedule SE, which is for self-employment tax, because you have to not only pay potentially income tax, but also the self-employment tax, which is Medicare and Social Security. Those are all basically the same.
Let's talk about the Totalization Agreement. What is it? How does it work?
Oh, well, a Totalization Agreement is an agreement that the U.S. can have with a number of different countries. So these are agreements. A lot of these are with European countries, but there are agreements to help you avoid double tax. That means having to pay the self-employment tax or Medicare, Medicaid portion of tax to the U.S. and also pay the equivalent of that to your host country. When you can qualify under one of these totalization agreements, it means you generally either pay one country or the U.S., but not both. So there's a couple of rules, general rules around that apply to most totalization agreements. It depends on how long you're going to be in the host country. So if you're there as an employee working temporarily 2 years or less, generally you just pay the United States and not the host country. But if you're there for much longer term, 5 years or plus, then typically you pay that host country the equivalent of the self-employment tax, which is again is Social Security and Medicare, and you don't have to pay the U.S. And one of the really nice things about these totalization agreements is that if you're paying to one country, you can transfer those credits earned for benefits to the other country. So it helps, number one, avoid this double taxation, and it also helps you get benefits when you maybe pay in for a few years to one country and you want to collect benefits in the other country when you retire. There's a whole process of transferring over those credits that help you give you the best retirement possible.